G'day guys, welcome back to Pete's Investing. It's October 28, 2023. This is the spot gold price update. On our weekly, daily and hourly, weekly and daily, we're still in a long bullish momentum. On the hourly, we were short, but now we're broken up at least sideways, if not bullish. I'd like to see this on the hourly chart, the 400 CCI break up as well. So I'd call that a flat direction. But zooming into each of these, you can see here, on the weekly, first off, between that Fibonacci range, it came down and broke just below the 50% level and went almost as low as a 61%, and it bounced from there quite convincingly for the last few weeks. So that's a nice big bullish movement on the weekly. On the daily, again, you can see there our CCI 400 and 150 have both broken up beyond their moving averages, and the moving averages have turned up. And if I zoom in there, you can see there between that Fibonacci range on our last video, it was hovering around the 61% level. And I always say that's a key area to look out for. It's either going to bounce down from there, or if it breaks through, it's going to make further upside. And it's actually broken through to the upside since our last video. So we'll keep an eye on that. And now it's approaching, it's halfway between the 61 and 78% level. Now on the hourly, we did have a, you can see there, we did have a resistance up there at 1997. It's punched through that, and I'm going to remove that resistance. Now the next level of resistance now is this hard resistance up there at 2082. So we'll keep an eye on that, see how it goes. But we did have this bearish divergence that started. We had a couple of them actually. It missed that one there, broke up. So when the bearish divergence failed, we need to see the CCI go higher than that point there. So we consider that a failure. Then we had another bearish divergence shown there versus the price. Now since then, we had a target set there, but since then we would have revised it and moved that Fibonacci to that level. So if we move that target area, let's just move that up there. Between that revised 23-38% level. Now, I'm going to mark this as a questionable hit because technically you can see there that the Fibonacci 23% is 1953, and it came as low as that wick went as low as the low 1953. I'm going to mark it as a failure because I don't want to cheat the system, so I'm going to mark that as a failure as well. We could argue it's a hit, so you could either put it as a question mark, but we'll mark it as a failure in terms of a trade. Now ideally, I like using these divergence as exit areas. So if you're going long during this period, you would have been probably wise to take some profits. But again, sometimes these reverse and continue up like it did in this case. So at the moment on the hourly, I would call these a flat ranging trends, but it has broken higher. Now in terms of going back to the daily for a minute, you can see there it's broken up, and we're now looking at possibly reaching further highs and now threatening this hard resistance at 2082. So that's where we are at the moment. Overall, the longer term weekly and daily are in a bullish mode. The hourly is also starting to turn bullish possibly in the coming hours, but I'll call them flat. And as soon as those moving averages start turning more bullish, then we'll consider that as for long trades. So that's where we are at the moment. Our divergence has technically probably failed, but the momentum is still moving to the upside. So if you got value out of the video, hit that subscribe and the like button, hit that notification bell. Thanks for watching, and see you in the next video.